more than 15 years as a financial consultant, and this is the biggest misconception about investing. What is up, money hearts? In today's video, we are going to talk about risk. To be specific, the myth that investing has to be high risk. There are so many ways to invest, and it can be confusing for people who don't know how to do it. So our jobs as consultants is to customize and tailor-make a financial portfolio for you that will, number one, let you reach your goals in time, and number two, make sure that you don't take more risk than you can stomach. Our focus of this video is on point 2, the risk, and there is an exercise that I usually use to quickly gauge where my clients are in terms of how much risk they can take. So I usually tell them on a scale of 0 to 100, 0 being putting all your money inside the bank, and 100 being putting all your money into playing one round of red or black in a roulette game. Of course, this number will change with investment experience, investment knowledge, and time. For example, some people may invest and lose money, so they are less willing to take risks, and there are some people who invest and gain more knowledge, so they are willing to take on more risks. Based on your number from the exercise, there are 4 different risk levels that you may land on. And in this video, we will cover what kind of investments that you are more suitable for based on your risk level. So first up, we have 0 to 25, and that is what I call the no risk zone. So these are the people that cannot take risks at all. They would very much rather put all their money in the bank than have that little bit of risk that the money can be lost through investing. So for this group of people, usually I would recommend fixed deposits, endowments where there are guaranteed returns. And for some of them, I would recommend very low risk funds with very little volatility. If you are looking to invest on your own, you can also look at blue chip stocks whereby there is long-term growth potential and yet there is very little downside to losing your money. The next group of people are the 26 to 50 and what I classify as low risk. So these are the people that understand that they need to invest, but they are somewhat uncomfortable about it. So many people who haven't invested before will fall under this category. The lowest score usually is attributed to lack of knowledge about investment and lack of experience investing. So for this group of people, I usually recommend bonds or bond funds, some low risk funds, and if you are a little bit more adventurous, you might want to take a look at global equity funds or even S&P 500 ETFs. So these investment options provide long-term growth. There may be volatility from time to time, but if you stay invested over the long term, chances are you'll be quite happy with your investment returns. Next up is the people who scored between 51 to 75 and what I call medium risk. So these are the people that I usually recommend a core and satellite strategy. So you have your core, which is made up of your long-term investment options. These are investment options that earn you long-term growth. You don't usually change what is inside your core portfolio unless there is some drastic change in the market. And then you have your satellite investments, which are more high risk in nature. So these can be higher risk funds and stocks, it can be crypto, or even alternative investments. So the core satellite ratio is usually 70-30 or 80-20. You can always adjust the ratio along the way. So the idea is your core portfolio doesn't change much and earns you growth over time, and you use your satellite investments as a booster. If they do well, then your overall portfolio will increase in value, but if they don't do so well, you still have your core portfolio to back you up. Of course, you decide what is inside your core and your satellite portfolios. I don't want to go too deep into it in this video. The last group of people are the ones who scored 76 to 100 and what I call high risk. Now, of course, for this group of people, anything goes, right? I mean, they are prepared to put a majority of their money in a game of red-black. So for this group of people, I would usually recommend for them to at least have some form of core investments ready. I know you're okay with taking some losses. You still need a form of a safety net or a trampoline. So if you are too badly burned in your high risk investments, you still have a backup plan. So yep, those were my recommendations for what to invest in based on how much risk you can take. Of course, this is just a rough gauge. You will need to experiment and tweak your portfolio over your investment journey. The important thing is to not get stuck in analysis paralysis, whereby you overthink of what to do, where to invest in, to the point where you don't even start investing. What I usually recommend is start safer, and as you gain more experience, you gain more knowledge about investing, you can either be very happy with what you have and where you are heading to, or you can tell yourself, I have more experience in investing, I have more knowledge, I might be able to take a little bit more risk in exchange for higher returns. So hopefully this was a helpful guide to let you gauge where you should be investing in based on your risk level. With that, thank you for coming to the end of this video. Sending you lots of love. See you in the next one.